Good morning. Curtis Chandler here, President of PFL, bringing you this week's North American rail, energy, and macro update. Starting with the markets, we saw stocks close higher for the week despite Friday's decline. Dow finished up 433 points for the week at 45,834 points. The S&P gained 102 points while the Nasdaq surged over 440 points to close at 22,149 points for the week. In overnight trading, Dow futures traded higher and are expected to open up 95 points from Friday's close. Job status showed weakness with initial jobless claims jumping to 263,000, which was up 27,000 from the prior week. In the energy space, crude oil had a strong week. WTI closed Friday at $62.69, up 82 cents per barrel week over week. Brent crude gained $1.49 for the week to close at $66.99 per barrel. This morning, WTI futures are poised to open at $63.04, up 35 cents from Friday's close. Looking at the latest EEI inventory data, crude oil stocks increased by 3.9 million barrels. Week over week, gasoline inventories rose by 1.5 million barrels week over week, while distillate inventories increased by 4.7 million barrels week over week. Propane was up 1.5 million barrels week over week and are 12% above the 5-year average for this time of year. Now, for the rail traffic update, total North American rail volumes were down 2.91% compared to the same week last year. 10 of AAR's 11 major traffic categories posted year-over-year decreases. The largest decrease was from forest products, down 14.2%, while motor vehicles and parts was the sole bright spot, up 8.73%. Let me turn to the big stories we're tracking for you this week. And last week. The 4-week rolling average of petroleum rail cars rose to 28,578 cars from 28,262 cars, an increase of 308 cars week over week. Canadian volumes were weaker, with CP down 11% and CN was down 4%. U.S. shipments were mixed. CSX was up 18%, but the UP was down 12%. The big story this week is what we saw was at the AIHA conference in Edmonton, Alberta last week, with over 1,000 industry leaders gathered, and the message was clear. Alberta's heartland is growing faster than its infrastructure, and rail projects will decide which projects move ahead. 2 major capacity projects grabbed attention. One expansion underway will nearly double existing storage space, with completion expected in 2026, and another terminal planned for Strathcona County will include dual service by CN and CP. We are watching some major consolidation moves. The $7.9 billion Cenovus Meg Energy merger faced fierce challenge from Strathcona Resources, which updated its bid to $30.86 per share last week. With the October 9th shareholder vote approaching, this merger could create a 556,000 barrel per day bitumen producer. On the West Coast, we're seeing dramatic changes. Phillips 66 Los Angeles refinery and Valero's Benicia plant, together almost 300,000 barrels per day, are both slated to close by mid-2026. That's 15% of West Coast refining capacity vanishing, which will reduce demand for Canadian heavy barrels just as TMX marine exports have expanded. We're also watching a shipping collapse that's creating opportunities for rail. The Premier Alliance suspended its PS5 service in early September, and multiple carriers are announcing blank sailings as container demand softens. This creates significant opportunities for crude by rail through reduced competition for shared rail infrastructure. On the rig count, North American rig count was up 7 rigs week over week, but down 83 rigs collectively year over year. The U.S. has 539 active rigs, while Canadian Canada has 186 active rigs. Finally, we're watching left-wing Canadian Prime Minister Carney's latest scheme. He's always got one, folks. Promoting the Port of Churchill as Canada's answers to diversifying energy exports. Industry experts are calling this economically non-essential, with one expert noting that the seasonal port is far worse than investing in a year-round port. Key takeaway this week is infrastructure bottlenecks are creating both challenges and opportunities. Alberta's rail capacity expansions could unlock significant growth, while West Coast refinery closures and container shipping weakness are reshaping demand patterns. The Cenovus Meg battle could determine market concentration in the Canadian oil sands. For the latest updates on equipment for sale or lease or customized rail solutions, contact us here at PFL. Remember, we clean, we flare, service, and store rail cars across North America. Make sure you check out this week's comprehensive report with more detailed charts and analysis. You won't want to miss this week's read. Thanks for tuning in. We'll see you next week for another update on what's moving the North American rail and energy markets. Hope you have a safe week. Make sure you read the report and give us a call here at PFL at 239-390-2885 for any questions that you may have. Thank you.